Good afternoon, traders. It is June 18th, about 2:45 in the afternoon. My name is Daniel, and this is the view from my vantage point. I want to start off to all you fathers out there by saying happy early Father's Day. Hopefully you've got some great plans over the weekend, some golf, some boating, some just relaxing. I know I do. All right, so let's talk about one of the most important aspects of your trading, your timing. Trading is about timing and direction. If you don't get those two things right, you break even, you lose money consistently, like 85–90% of the traders out there. If you can improve your timing and get better timing on your entries and your exits, your results will change dramatically. VantagePoint is designed to improve your timing by predicting 1 to 3 days in advance with an accuracy rating on those predictions up to 86% accurate. So when you're looking at VantagePoint, and that's what we're doing right now, we're looking at a stock called Micron Technologies in VantagePoint trading software. When you're looking in VantagePoint, you've got a blue line, you've got a black line, and you've got a green line. Now that blue line, that's a predicted exponential moving average. That's giving you actual predictions of the directional trend of this market and when. Remember, timing is very, very important, if not one of the most important parts of your trading. If you can improve your timing by getting a prediction, you can make more money. So when the blue line crosses below the black line, like you see on the left-hand side of your chart, that's VantagePoint indicating that this trend is expected to go down. That's an advanced notice of a down trend. Now you can see it's very clearly different than the black line, where the black line is a simple moving average, a very short-term one, and it's still saying uptrend. The advanced notice that the blue line is giving you by saying this trend is expected to go down is going to improve your timing and help you make more money just by getting that prediction. Now, in addition, you also have a green line at the bottom. That's a predictive strength indicator, meaning if the average price of Micron is expected to be lower over the next couple of days, that's indicating a strong downtrend. Well, when it's down in the zero, that's exactly what VantagePoint is saying. The average price of Micron is expected to be lower over the next couple of days. So when that blue line crosses below the black line and that trend is expected and predicted to go down, and that neural index is saying zero, that's giving you an accuracy of up to 86% that this trend is going to go down. Now, by jumping into a position early, you can improve your timing and make more profits. By getting out early, I'm going to draw a little trend line and show you. There's your entry. There is your exit. The blue line crossed above the black line, indicating that trend was over. The neural index jumped up to a 1 position, also indicating short-term strength. Now, you've gotten into this position early, you've gotten out of this position early, and you've maximized your profits, picking up $2 per share or more. Now, let's just adjust that slightly. Just make a minor adjustment in this and see what exactly that's going to do. Now, usually traders get in after 3 down days. We don't have 3 down days here, not until 1, 2, 3 down days. Getting in after 3 down days, on that 4th day, you can see you make profits. Very nice profits, $1 per share. But remember how much you could have made by having better timing. $2.14 per share. It's a 100% increase by improving your timing. All right, let's go back to that incredibly early entry that VantagePoint indicated, but let's change the exit. 1, 2, 3 up days. Let's move that exit up to a normal exit. Now that $2 per share profit dropped down to $1.43. You knocked off 60 cents just by having a bad exit. Let's say you didn't get a good entry or a good exit. Now you took a $2 profit to a 33-cent profit by getting a poor entry and a poor exit. That goes back to the traders, the 85–90% of traders that are losing money or breaking even right there. There's an actual description or an illustration of what happens in those situations. That's why you need to get VantagePoint. VantagePoint's going to give you the early entries and the exits so you can make money on a consistent basis. There's one position. Let's talk about this other position. There's your exit. Blue line crossed above, indicating an uptrend, and then it crossed below, indicating a downtrend. There's another $1.31 per share. And then you've got another position right here that's currently on. 3 trades. Just in this stock alone, you're up, $6, $7, $8 a share roughly. By getting an early entry and an early exit using predictive technology in VantagePoint, you can make money consistently. All right, let's fly through a couple of these. Green Mountain Coffee Roasters, very popular stock. You can see that the blue line crossed below the black line back at the beginning of May here. And as long as that blue line stays below that black line, VantagePoint is indicating that trend is expected to keep going down. So in this one position, it's gone down 24%, about $27 per share roughly. Now here's where the timing really kicks in. Look at this. Let's say you didn't catch this when VantagePoint indicated it was going to go down. This big gap down happens, and then you decide, you know what? This is going to go down, and you get in here. Well, instead of making $27 per share, you make $15 per share. Still a great profit, right? Well, what about the other 12 bucks? VantagePoint customers have the opportunity to pick up that extra profit that a lot of traders are missing. Now, these predictive indicators are patented. There's nobody in the world predicting and transforming standard technical indicators into predictive ones like VantagePoint. All right, here's another one, Skechers. Now look, we've talked about a down market, we've talked about an up market. At the same time Green Mountain was going down, Skechers was forecasted to go up in VantagePoint, and it's gone up ever since. Here's another $37 per share roughly in Skechers in one trade. Now check this out. There's a gap up in Skechers. Now, a lot of people didn't get into that position until after that gap up. Well, let's see. What does that profit look like in a position that happens from that gap up until the same exact point today? There you go. $23 per share. Great profit. What happened to the $36 per share? There's another $13 per share just by improving your timing. And it's the same with Forex. Same situation. Look at the pound yen. The pound yen's been trending for a while. VantagePoint indicated it was going to go up way back here at the beginning of April. Now remember, we're at June 18th. So at the beginning of April, this was indicated to go up. There's an $18,000 profit per lot. Now it costs you about $2,000 to trade that lot or less. With the leverage in Forex, you're talking about almost making $20,000, guys. So far in stocks, in Forex, we also forecast in VantagePoint for futures. The predictive indicators give you better timing and improve one of the most critical aspects of your trading. The question for you, I'm sure, is how? How is it so accurate? Well, it's based on intermarket analysis. The markets are global, and VantagePoint is looking at the global relationships to determine where these markets and these stocks are going to go through a process utilizing neural networks. These neural networks can crunch mass amounts of data, generate a forecast, and a prediction that's extremely accurate. With Father's Day holiday coming up, I hope you guys enjoy your holiday. I hope this information can help you be more successful, and I hope you give us a call and get started with VantagePoint, because there's no doubt in my mind, and by this point there should be no doubt in yours, this is a critical part of your trading, and it's about time you do something about it.